Good afternoon, ladies and gentlemen, or good morning if you are joining us from across the Atlantic. I'm very happy to have you here with us today as we are going to discuss a really timely and extremely important topic, not only for our focus region, Central and Eastern Europe, but also globally. I'm waiting to see a critical mass entering the call. I think it's looking good. So we can get started and dive in right away. So I think it's not an exaggeration to say that the global economy has been experiencing quite a few shocks and shock waves over the past few years. Just think of the repercussions of the COVID pandemic, the increasing competition between the United States and China, the economic impact of Russia's invasion on Ukraine, or most recently, the instrumentalization of tariffs by the new Trump administration. These shocks to the economy also signal a significant transformation of how the world's economic order is working, has been working for the past decades. And we are slowly moving to a phase where free trade is not a given, where actually there is a decline in global economic cooperation, coordination, trade flows are weakening, and we do see the formation of geo-economic blocs. Overall, these are pointing in the direction of global economic fragmentation. Now, why is this something that we should look at from the Central and Eastern European perspective? Well, as we all know, Central and Eastern Europe has been one of the biggest beneficiaries of of globalization of the past few decades. It benefited from these processes, interconnectedness. It has been building its growth models on significant FDI. So it's logical that global economic fragmentation would impact the region. But how? And that is precisely the question that we will discuss today. And we are very fortunate to have with us three experts of the topic to enlighten us. We have with us Jan Boguslavsky, who is one of our very own Rethink CE fellows at the German Marshall Fund, who has been dedicating his fellowship to the exploration of the impact of global economic fragmentation on the region of Central and Eastern Europe and trying to map out potential answers to the process. And we are also honored to be joined by Assistant Professor Wisnia Vukov from the University of Vienna, who has been studying models of economic transformation and growth in the European Union's peripheries, as well as Professor László Brust, professor at CEU and also director of CEU's Democracy Institute, who is an authority on politics of economic integration of the eastern and southern peripheries of Europe. Finally, my name is Zsuzsana Vég. I'm a program officer at the German Marshall Fund, and I am managing our Rethink CE Fellowship Program, which is a program that supports young researchers, analysts from Central Europe, the Western Balkans, and the Eastern Partnership countries, so Eastern Europe and the South Caucasus. And through this program, we are aiming to not only develop new talent in the region, but also contribute to fostering a culture of evidence-based analysis, policy research across the think tank sectors of our target countries, and try to facilitate the integration of the region into international policy debates through empowering young voices, such as Jan, who is going to kick off our session today by presenting the key takeaways from his research. Before I give him the floor, just very briefly, a few housekeeping rules. As you will notice or will have noticed, this is a session that is on the record, and we are going to put the video of it on the website of the German Marshall Fund and on our YouTube channel. We will now start with Jan's discussion and then the contributions of Ms. Sukov and Mr. Brust. You will also have the opportunity, of course, to ask questions, share your comments. Please for this use the Q&A box, and I will be picking up your questions when we move into the Q&A session. So without any further ado, I will now pass the floor to Jan. And once again, thank you very much for joining us, and we hope that you will enjoy the discussion.
Thank you, Zuzanna. Thank you to Wisnia and Laszlo for also being here. And most of all, thank you to all attendees for joining this panel. Let me first share the screen with a very brief presentation that I have prepared for the first opening intervention, so to speak, concerning the topic. Just a second here, please. Okay, I'm sharing the screen, right? Okay, slides. Great. Well, so I will actually start off the panel based on a short presentation that will mostly map the field of global economic fragmentation and Central and Eastern Europe and the interaction between the two, followed by a very brief zoom in on the potential ways in which the two might actually be related. So in a sense, I hope that for this, I will sort of open the discussion and we will perhaps discuss the actual sort of takeaways from the interaction further down during the discussion. So without further ado, let's make sense of global economic fragmentation and basically all these changes that we've been witnessing in the last couple of years concerning the dynamics of global trade and its global coordination. So the first sort of takeaway that we can think of is that we know that something is up. You know, just recently we've had so much discussion concerning the US reciprocal tariffs based on the Trump's administration decisions, but this is really just the tip of the iceberg. And deciding on what this new globalization really entails is actually not a particularly easy exercise. And based on that, what we can say is that whatever it is that is up, it's very much in the eye of the beholder. So for instance, there's a lot of views concerning what this something really is, and whether we are dealing with, for instance, the collapse of globalization, whether we're dealing with deglobalization, or some new form of globalization, such as globalization, geo-economic fragmentation, or perhaps we're simply looking at the reemergence of trade as a geopolitical weapon. So, you know, or vertical globalization, there is plenty of options we can choose from. For the paper that I've written on this and the general discussion concerning the problem, I sort of settled for the expression, the global economic fragmentation that was used by the IMF in one of its discussion papers, which essentially entails the increasing division of the world into distinct blocks or regions characterized by separate trade system, economic policies, or geopolitical. Yeah, so essentially what we are seeing in one way or another is the reemergence of trade protectionism across the world. But the problem with the global economic fragmentation, from my perspective, is that it's not really a sort of autonomous trend on its own. It's rather a confluence of a number of more incremental structural trends, as well as one-off catalytic events that produce this specific outcome. So for the catalytic events, we can differentiate, for instance, the US-China trade war, which has been accompanied by decoupling and de-risking, and this discussion has been going on for quite a long time, ever since 2010s. So it's sort of in between an actual event and more of an incremental trend. And then we've got the COVID pandemic and the supply chain crises that's ensued in its consequence. So for this, we've got mostly the commodities markets being affected in one way or another. Then we obviously have the Russian invasion of Ukraine, which has also impacted particularly energy politics in Europe and beyond, but also has affected the trade in different resources and generally has weakened global economic coordination in a variety of ways. And finally, particularly recently, ever since the start of the second Trump term, we obviously are seeing a lot of new and dynamic developments relating to tariffs, as you probably know. At the same time, we can also analyze the GEF, or the global economic fragmentation, based on these more incremental structure changes that have been going on, such as the bifurcating global system, the rise of China, and this increasingly visible division line between the China-aligned and the US-aligned blocs, but also the fact that trade in commodities has in fact been plateauing more or less since 2008. So there has been some more incremental changes to globalization even before all these crises actually took place. We've got rise of digitalization, the knowledge economy, the rise of cross-border dynamic services trade, which are also in different ways sort of affecting local markets and sometimes prompting more interventionist trade policy outlooks, as well as green transition, which prompts restructuring of certain industries and supply chains. So altogether, I think these two sort of levels of analysis culminate in the global economic fragmentation. For the interest of time, I think we can switch. We can pretty much skip what these structural transformations are, but there is a lot of empirical evidence to show that trade policy has changed in the last decade or so, with the rise of protectionist measures across the globe, with a sort of plateauing global trade in relation to GDP, particularly as far as commodities are concerned. We're obviously seeing China become the global producer and exporter, and sort of crowd out a lot of US involvement in many places across the world. And overall, we're seeing some interesting dynamics when it comes to global trade openness. In this context, how does Central and Eastern Europe really sort of come in based on this picture? As Zsuzsanna mentioned in her introduction, well, Central and Eastern Europe has largely benefited from these past waves of globalization, so to speak. We can, differentiate a number of ways in which this benefit has materialized, starting with the strong engagement with transnational supply chains and the regional specialization in production and exports of intermediate goods. This sort of occurred in consequence of what Richard Baldwin called the globalization second unbundling, which basically meant that all of a sudden the cost of moving ideas was low, and firms could outsource part of their production functions to cheap labor locations. And based on geographical proximity, Central and Eastern Europe was a major benefactor of this trend. But at the same time, Central and Eastern Europe exports mainly to Western Europe, and the rates of exports or rates of trade outside Europe as a continent are relatively low. Western European firms tend to be tightly integrated into the CE production chains, especially when it comes to commodities. And so in a way, we're seeing this Western European brokerage when it comes to CEE growth models, where Central and Eastern Europeans produce a lot of subparts and intermediate goods that are exported to mostly Germany or other Western European countries to then be moved on outside the continent. And so in this sense, we can still see that there is a very tight coupling between Western Europe's corporate strength and economic performance and CEE's economic condition. And again, this shows up pretty neatly in data. Central and Eastern Europe is actually among the regions, the global regions that see the highest trade to GDP rate out there. It's, as some academics have theorized, it's based on FDI finance expert-led growth. And basically the bottom line is that experts form the pinnacle of the growth models that many of the countries in the region pursue. But with that said, as I sort of mentioned in passing just a minute ago, this expert-driven growth model comes with caveats. For one, especially in comparison to the old EU Western European countries, Eastern Europe tends to export, especially goods, mostly to Western Europe. So much of these trade flows are intra-EU. And second of all, the supply chains, which largely orchestrate these trade flows, are let's say controlled, but are largely related to corporate structures coming from firms from Western Europe itself. So in figure 2, what you basically can see is the fact that according to Eurostat FATS database, the CE share of value added by foreign companies is much higher than it is the case in the old EU. And so kind of based on this fairly generic picture, I am thinking, I'm jumping into the ways in which we can make sense of CEE's internal diversity in the face of global economic fragmentation. And here, the idea is that while there is a lot of sort of commonalities in CE, there is also a lot of internal diversity. And ideally speaking, as we discuss the GEF, which is, this overarching major trend that affects a lot of things out there, we kind of want to capture this overarching influence on a more granular level. So for this, I decided that the best way would be to introduce a brief typology of CE countries in terms of their model of interactions between their economic growth and trade. And this typology is, while it's quite exhaustive in terms of the indicators that I used for it, can be basically, it boils down to 4 key factors. The first one is FDI absorption capacities. So what are the labor costs in a given country? What is the quality of fixed and human capital? What is the regulatory framework stability? Second of all, the role of experts and FDIs in national growth models vis-a-vis domestic consumption. Third of all, sorry, let me just the expert composition, so raw materials, manufacturing, and intermediate goods versus final goods, services. And fourth of all, value chain positioning. What are the key trading who are the key trading partners? What's the degree of trade diversification and regionalization? And based on this exercise, I came up with a typology of 4 models, which include 4 clusters of countries. First of all, balanced exporters. So that's Bulgaria, Croatia, Poland, Romania, and Serbia. These are the countries that tend to be sort of medium on everything, i.e. they export quite a lot, but at the same time, not as much as some of the other countries in CEE. They tend to have relatively well-developed services experts, but at the same time, not as big as in some of the other CEE countries. They tend to have relatively good capacities for FDI absorption, but again, not as high as some of the other, or not as low as some of the other countries. They tend to rely on Germany and so on and so forth. I'd say the key fact about balanced exporters is that the balance that they have comes from the fact that exports do not play as dominant of a role in their economic growth engines as it is the case in the second country cluster that I identified, so the German affiliated industrialists. This involves Czechia, Hungary, North Macedonia, Slovakia, and Slovenia. Well, these countries are very much industrialized. Exports are the key growth engine in these countries. Manufacturing is the facet of that growth. Services tend to play a little role in their exports. They have high FDI absorption and low diversification of trade partners, with a very central role played by Germany. Third of all, we've got the northern ICT regionalists. So this is the usual kind of clustering of the Baltic countries, which tend to come together in many of these typologies. I'd say that the main sort of facet of this cluster is the fact that these countries do not really rely as much on industrialization per se, but more on general technology. They are still very much exports driven, but at the same time, it's slightly different types of exports. Their reliance on Germany is low, and instead they tend to trade mostly with the Nordic countries. And so this is a bit of a kind of in-between cluster between the balanced exporters and Germany affiliated industrialists. And finally, we've got the volatile resource economies. So these are non-EU member states, which tend to, for one, export more of their products in raw materials and resources, which generally tend to have negative current account balances, for which essentially export is not as central of a growth engine as it is, especially for the German affiliated industrialists. And these countries tend to grapple with slightly different structural problems due to their non-alignment with due to their lack of EU membership, as well as different types of regulatory and political challenges. As with any typology, this is basically an exercise that is aimed at inferring some common trends and basically making sense of this internal Central and Eastern European diversity when it comes to institutional and economic models. So obviously, there are countries that fit in more to a given characteristic than others, and we should be aware of that. And with that said, I think there's maybe 3 elephants that we could just briefly touch upon. It's actually the Western Balkan countries which tend to have where it's a bit difficult sometimes to attribute them to a very specific cluster. This is especially the case for Croatia, which is essentially a bit of a nightmare because it has very unique institutional and economic characteristics, a lot of reliance on tourism, but some industrialization. So it's not really a volatile resource economy, but it's not quite the best case for a balanced exporter. And Serbia is also a fairly unique case as a non-EU member, as well as a country that is that has a slightly different geopolitical alignment than most of the countries in the region. And finally, North Macedonia is also worth mentioning. I have attributed to North Macedonia to German affiliated industrialists to sort of emphasize the fact that among Western Balkan countries, it actually has, for one, a sort of strikingly strong trade relationship with Germany. For two, it has a relatively, or sort of within Western Balkans, it has a relatively well-developed manufacturing sector, but at the same time, it obviously is still a very much different country when it comes to its growth models to Hungary, Slovakia, or Czechia, or even Slovenia for this matter. So yes, for this, I think this is the kind of general picture that I've painted of this internal diversity. And now thinking about ways in which the CE and the GEF come into interaction, I came up, when I was writing the paper, I came up with a fairly brief introduction into the, I came up with a fairly brief introduction into the strengths, weaknesses, opportunities, and threats that CE sort of faces in the context of the GEF. So some of the strengths are there and are kind of timeless, such as proximity to Western Europe and the track record of FDI absorption, access to single market. So obviously in the context of a dynamic that is all in all one that predicts a sort of further tightening of the pre-existing trade relationships. This will play into CEE's strengths, but at the same time, as we know, this might also turn into a weakness in the sense that such a relationship can nurture this economic dependence and creates a structure of incentives that doesn't really encourage as much product innovation as could be the case under different circumstances. There's also other weaknesses such as high energy costs, demographic challenges, as well as the fact that geopolitics and sort of context of Russia remains very important. And within this picture, there is a number of opportunities that are worth highlighting. I'm not going to discuss all of them now for the interest of time, but these include the idea of connector economies, that is basically following this geopolitical vector of connecting the two competing global blocs and benefiting from this kind of dual affiliations, new logistic routes, the fact that as kind of reshoring becomes more of a trend, and as Western companies are increasingly factoring in geopolitical issues into their investment decisions, CEE is a region that might benefit from that, as well as especially for the non-EU member states. Obviously, any potential kind of traction to EU integration processes could be a major boost. But with that said, there is a number of threats, and those include, for instance, the global realignment in the automotive sector, which is particularly important for the Visegrad 4 countries, which to different degrees rely very heavily on this sector as a main engine of growth. Energy market disruptions, again, particularly for those high manufacturing countries, slowdown of the German industrial hub, which again sort of forms the pinnacle of the entire growth model, and generally EU-wide competitiveness issues. So, in the context of the Draghi report and all this discussion, obviously, Central and Eastern Europe is still very much sort of affected by these dynamics, even if the patterns of economic growth for the past decades have kind of shown us that CEE, is doing relatively well, and these competitiveness issues are mostly an issue for Western Europe. This is not really quite the case, or it's not really that simple. And so based on this, and sort of marrying this perspective with the typology that I created 3 slides ago, I think the unified exposure of CEE to GEF is basically about Western Europe's competitiveness shift. So basically, the main vulnerability are potential changes in German and West European industrial strength and fluctuations in foreign demand. And with that said, there is some variegation in that potential impact. So German-affiliated industrialists, those countries appear to be the most exposed to GDP-driven shock. Especially, the case in point here is the automotive sector, but basically because these are the countries that rely on this domestic demand the most, and these are also the ones that tend to have relatively little services experts, which can act as a buffer as much as domestic demand-driven consumption, domestic demand-driven growth. Then we've got northern ICT regionalists and volatile resource economies, which kind of show mixed picture. There are some risks such as Russian security threats, but also some opportunities, EU enlargement, and generally lower dependence on German brokerage. But particularly for volatile resource economies, it's, I think, difficult to model or predict how GF will play out, for one, because these countries generally tend to be a bit less reliant on globalization as a whole, and for two, because these countries tend to face very unique risks and sets of circumstances. And finally, balanced exporters are, I think, best positioned to balance these commodity exports with domestic consumption and services. And these countries also tend to be the larger countries. So the last decade or so, we've seen basically two most consistent success stories in Central and Eastern Europe. This is Poland and Romania. And I think one of the reasons for this is that these countries tend to have better buffers. So basically, some manufacturing, but also a lot of services, a lot of domestic demand, and such more sort of flexible economic structure allows them to sort of adjust to these externalities in a more timely manner than in case of some of the other countries. And maybe a final point, I will skip the final slide, but I think this is also important beyond sort of a very economic talk. I think this is also important in the context of intra-EU geopolitical alignments. So basically, if growth levels, if GEF basically really does limit Central and Eastern European growth levels, particularly among the countries that are those exposed to Germany and with high manufacturing outputs, this might actually prompt these countries into rethinking their relationship with the EU and sort of incentivize them to kind of follow into the Hungarian kind of policy of pivoting between the EU and particularly China. So Hungary's Eastern opening policy, and we can kind of see that already in the case of Hungary with the high inflows of Chinese FDIs, as well as around the discussions on the EU's tariffs on Chinese electronic vehicles. So there is a lot of geopolitical gravity to this, and I think it's important that we connect kind of both levels of analysis. I think for the interest of time, I will just skip this last slide. So thank you very much.
Thank you very much, Jan. You will not get away from the topic of your last slides, because I know that you also have some recommendations on how to deal with the situation. So I will circle back to that, and I would definitely want you to bring some of those into the discussion. But before we get there, I would like to pass the floor now to Visnya and hear your first reflections on the topic. And in the meantime, while you're speaking, I will put the link to Jan's paper into the chat.
Okay, so thanks a lot for the invitation, and thanks a lot, Jan, for the presentation and for the report, which I liked a lot, and I read it with great pleasure. So there are two things that I really like. One is sort of how we can use and how we can adapt this growth models perspective to actually try to understand and to see what the reactions or what the responses or the futures developments in Central and East European or East European economies in general will look like. And then secondly, I like also the typology that you develop, and I fully sympathize and understand this difficulty of sometimes putting countries into specific types and sort of having the cases that would not really fit very well with one or the other typology. And I think that overall, kind of the report outlines very nicely some of the strengths, some of the opportunities, the risks, the weaknesses, etc., etc. Now, one or a couple of things that I would then still like to add to this, or that I would see missing from the report, but not everything needs to be in the report, no? So some things for further discussion One is, and also linked a little bit with this categorization of economies, one thing that one would need to look at a little bit, especially if we speak about diversification, then it is not just about this macro level, whether it is exports or domestic demand or domestic consumption, but actually, what kind of sectors are there or how diversified an economy is. And you mentioned actually several of the examples of, Slovakia being very dependent on car manufacturing, Croatia being very dependent on tourism actually, and thus not fitting anywhere. So this is one of the things that I think we would need to look at also if we want to examine what will be the developments in the future, and then also a little bit of the trajectory, to what extent some of these countries indeed fulfill what Baldwin would say about this, kind of big chance and sort of opening up and using the globalization and the trade openness for development, while in other cases we would actually see something like developmental decline of economic complexity. North Macedonia, for example, until a few years ago was actually the case very much of developmental decline. Some of the countries that I mentioned in the report as well, right? So I would say that these are also some of the things that we need to look at, and especially if we want to look into these kind of developmental opportunities or the chances for countries to actually sort of use some of the opportunities and engage in upgrading or in development, then one of the things that will certainly actually shape a lot the scope for that is the issue of state institutions, state capacities, what the literature would call developmental state capacities, state ability to engage in kind of industrial policies or economic policies, investment incentives, development policies, etc., that could actually lead to upgrading. And here I think I would also like to add and to warn that we need to be careful when thinking of sort of dependence on foreign direct investment as only a limiting factor, right? So there is a lot of discussion of dependency of Central and Eastern Europe on foreign direct investments, and indeed this can then actually have several crucial increased vulnerabilities or sort of have negative effects also on the amount of, for example, domestic value added or research and development, etc. But then in some cases, and in some of the countries that are discussed in the reports, like Poland, like Romania, like Czech Republic, what we could actually see is also a large element of industrial upgrading, the situation of, multinationals putting their research and development facilities there, etc. And in other cases, we might also see less of foreign investment, more of sort of nationally based economies, less openness for FDI, especially in the course of transition. And then this kind of existence of national capitalists did not necessarily actually lead to better developmental outcomes, right? So I would say that the key question is not so much on whether this is about foreign investment or it's about domestic investment, but the key question is much more about to what extent the state has the ability to implement the kind of developmental policies that would incentivize corporations, either domestic or foreign ones, to actually then engage in the activities that would bring higher value added, that would bring more innovation capacity, more economic complexity, etc. And then another element that I think we also need to take into account, especially if we want to look into the future, is especially, and this was partly mentioned in the end, but I would like to turn the argument around, is we will need to look into what happens at the level of the European Union and at the level of the EU, because I would somehow see and say that I agree with Jan, it can be difficult to actually, kind of put the right concept or the right label on the changing geopolitical and geo-economic global constellations. But I think whatever is happening at the global level sort of passes through the filter of the European Union policies, regulations, responses, and then has an effect on Central and East European countries or economies. And this goes both for those who are members of the EU and for those who are not, who are candidate states, because in the EU accession process, and all of the countries that I mentioned in the report would be either members or candidate states, the EU also exercises a lot of leverage on what the domestic policies and what the domestic policy responses will be like. So if we want to, for example, understand or predict whether the CEE countries will play the role of connector economies, then one of the connectors that they would actually not so much, let's say, the US or the Chinese companies investing there in order to circumvent their own tariffs and then export to either China or the US, no? But actually a lot of this will be about, investing into the Central and Eastern Europe as an entry to the neighboring countries that have trade relations with the EU, entering into them as a way, as a springboard for accessing the EU market. So to some extent, you know, the way in which common European responses will be developed for these changing geopolitical circumstances, for the increased US-China rivalry, will, I think, influence also a lot the future of the Central and East European economies. And I fully agree with Jan, we should not see Eastern Europe here just as sort of a passive subject. It is very much also an active agent, and, you know, it has a voice in these common EU responses. But I would say that to understand and to link Central and Eastern Europe with the global development, I think we kind of necessarily need to factor in this intermediate middle level of the regional bloc of the EU. Okay, so I will stop there for the time being, and thank you.
Thank you very much, Visnu. You raised a bunch of very interesting points, and I hope that on some of them we might be able to touch on a bit more in the discussion. Among others, the state capacity is also something that I have been contemplating when I was reading the paper, just how prepared the countries, the state administrations, governments are to really adapt to these changing dynamics. So maybe we can bring that back in the conversation later. But before that, I would like to pass the floor, of course, to Laszlo and hear his reflections on the paper, and encourage our audience to share their questions in the Q&A box.
Okay, thanks. I have to admit that Visnya killed some of my comments, but it's not by chance. We co-authored several papers together, so we know we are sometimes on the same wavelength. But let me start with saying that there's a lot to like in this paper. First of all, this is raising these questions is very important, and raising that in a structured way. As Jan does, that is to disaggregate both concepts, both the fragmentation, the factors of fragmentation, and then not treat the effects as a unitary effect, but look at diversity of effects and identify factors that might be responsible for these diverse effects. Is commendable, and so I think it's a very important step. Of course, my job is here to criticize, so I will just give some comments on how one could make even stronger this thing. The first thing that I want to say is that since this is about EU member states, largely. Of course, there are some, so West Balkans and then Ukraine, Moldova are not, but most of them are EU member states, and we are in Europe. I just would like to strengthen what Visnya already said, that EU has to come in, both as a factor of fragmentation. It has its own mechanism of fragmentation, and also as a potential terrain of finding remedies for this fragmentation. So let me stress one thing, that how the EU plays a role in fragmenting the markets further. The most important thing in the post-COVID era was not just the new generation EU program, but the other was relaxation of lots of market regulations. Relaxation, not just the monetary rules, but relaxation of, for example, of state aid. And the relaxation of state aid had dramatic consequences for the fragmentation of the market. And that is very important for the CE countries, because what happened is that whereas the EU spent altogether around 700 billion on the new generation program, the relaxation of state aid policies allowed, for example, just for Germany to spend 1 trillion on state aid. And so what is the effect of this kind of state aid? It's that the big monopolists of the European value chains get even more subsidies to stay at home. And first of all, not just stay at home, but keep at home the high value-added parts of the production, and then let the Central European countries to compete for the low value-added ones. That creates a trap. It makes very limited, dramatically limits the room for domestic state policies in the CE countries. Yes, so it's very important, and that's why when you mentioned the opportunities, and I liked very much actually this SWOT analysis. I never saw SWOT analysis on this kind of issue, these strengths, weaknesses, opportunities, and threats. It's a very nice summary. I would add for the opportunities of politics, that is, the Central Europeans should join forces and lobby or fight for either going back to the original state aid policies. That would be actually in the interest of the German industry. The German industry will not ever transform itself under these conditions. There is no incentive for it. So actually, it would be a European common interest to replace this kind of fragmentation of the European market with joint policies that develop industrial policies, use the strengths and weaknesses of the Central European producers, and try to upgrade, create a more competitive, jointly more competitive European value chains. Yes, so that's would be a great opportunity. That's why I would include it. Then the other thing, this is more minor things, it's that where you list the different factors that might differentiate these countries, the East and Central European countries. You mentioned manufacturing, export, and services. Here, the statistics that you use in your presentation about value added, and first of all, domestic share of domestic value added might be a better strategy, because we don't know whether these exports are high or low value added base. They are assembling, or they are, and that might affect the exposure to the fragmentation. Yeah, the higher, so to say, is the sophistication, the stronger might be the link, perhaps. I don't, that's actually a big question you might explore. The same is that another thing is that in the manufacturing export, it would be great to know whether what is exported is that something, these are products that have high asset specificity, meaning they can be only used in one MNC. This is, they produce only for Volkswagen, and that cannot be used in any other kind of car. Yes, or this is second or third tier producers who produce something that can be universally used in any kind of machines. That's and here I get to something that, and that's my last comment, is that what Vishnya already mentioned. This is linked to local, meaning domestic level policies and capacities to manage dependence. It would be great to include that as one factor of variation. Yes, that is, some of the countries have state administration, supporting institutions, banks, financial institutions, and other think tanks that have the capacity to foresee and manage these kind of problems. Others have zero, none. Some of them have policies, and they already diversified way before the crisis or these things that you mentioned in your first slide. Others are there. So that's perhaps the difference between, let's say, Poland and most of the other countries in that things. But all in all, I think this is a very good, very important starting. These are just minor things that I would suggest as for the next step. Thanks a lot.
Thank you very much, Laszlo, for your insights and thoughts on the paper. Before I give the floor to Jan, just a quick note. Please do share your questions and comments in the Q&A. I will be picking them up as we move into the discussion, but now I want to give the floor to Jan just to have a chance to react to all the input that he has received. And if you want, then maybe also just touch on some of the recommendations that you have put forward in the paper, because I think we have a very good overview of some of the challenges, but we should also talk about how we can move forward from here in the policy realm.
Sure. Thank you very much. Thank you very much to both Wisnia and Laszlo for these interesting and insightful comments. I will relate to them very briefly, starting with the one on state capacity, or as Laszlo put it, state capacity to manage dependence, industrial policy, state aid, and so on, because these are all, after all, governance issues, and they are absolutely critical, as you rightly pointed out. Well, I did try to sort of factor them in, but given that they are of a slightly different nature and they are far more qualitative than, you know, any kind of input and output tables that I used as the kind of basis for creating the typology, I did indeed perhaps could have spent more time sort of reflecting on those. And well, I mean, in general, I think as you rightly point out, these issues are absolutely central to our understanding of how CEE countries are going to be able to adopt to these changing global circumstances. I mean, there is, and we actually have quite a lot of literature on this, particularly as Professor Boost would know well, the special issue in the Review of International Political Economy that he edited back a few years ago, which I think is perhaps the best or the most sort of complete piece of research on these state capacities and the ability of CEE economies to kind of manage on the one hand dependence on foreign markets, for two, its own role within, or mediate its own role in global trade dynamics. And well, I mean, I guess my key point here is that indeed there is, I mean, the question of the state capacity is going to feature a lot in the coming months and years in the region. And I mean, to be honest, I don't know all the, I mean, I'm not really an expert on, you know, on the issue of particular institutions and types of state aid that can be best tailored for the different sort of circumstances of Central and Eastern Europe. I'm sure, for instance, Michał Hrubych, who seems to be in the audience, could tell us a lot about this. But at the same time, what's sort of from my field of expertise, which is more social policy, I would add is that sort of beyond these very direct governance measures, what I think is really important is social policies that will support flexibility and that will support you know, the adaptation to these new global dynamics and new global risks. And this is a critical problem in Central and Eastern Europe. So I mean, based on the you know, on the post-industrial or on the industrial pedigree of the region, the fact that these countries tend to spend so much on compensatory social spending, and you know, with the exception of the Baltics and especially Estonia, human capital investment is still not really that well accounted for. I mean, to me, it's also a critical factor that should be taken into account. Second of all, maybe dealing with dependence. So I absolutely agree with Wisnia that dependence is not really a one-way street. I mean, we can't really demonize it as something either, you know, bad, nor can we say it's just great. It very much depends on a set of circumstances a country finds itself in. And obviously, the whole CEE region, perhaps with the exception of the countries that have failed to, or that did not join the EU in the early 2000s, has largely sort of benefited from, you know, from this brokerage and from this type of relationship. And obviously there is still a lot of industrial upgrading going on. But I guess what I'm kind of the type of argument that I'm trying to make in relation to this dependence is that, well, basically for the geopolitical stability of Central and Eastern Europe as a region, you know, this dependence on the one hand means that, okay, we are all in the same carriage across the, you know, the East and the West. But on the other hand, I think it might, in the long run, it might actually exacerbate specific geopolitical tensions within the EU. And to me, especially for those countries, I mean, because obviously, for say Albania or Moldova, I mean, if there is capacity for FDIs and for investments by, you know, by foreign multinationals, this is pretty much a, you know, I mean, this is a great development. But for some of the other countries that have already sort of developed this industrial capacity, that have already been exposed to these knowledge transfers for the past decades, I think it's kind of time to step up and try to maybe actually go out there and find some other receiving markets outside the core EU. Because by doing that, I think the whole region of Central and Eastern Europe could actually, you know, strengthen not only national economies, but also make the EU as a political project more internally coherent. And maybe the point on state aid, finally, I mean, it's super interesting what Laszlo has mentioned about the relaxation of state aid rules. I have to admit that as much as I know the topic a little bit, I haven't actually researched much of it, so I will definitely look into it. And I think this again ties to this previous point that, you know, managing this EU coherence, the political EU coherence, would actually benefit from CEE becoming a bit less dependent in some functions. And finally, maybe a point on the granular data. I mean, yeah, this project is largely based on, you know, aggregate data, and there is a lot of that aggregate data, and I'm sure there is a lot of you know, of points that I'm very much simplifying just by the sheer sort of volume of synthesizing that the project does. But it's definitely worthwhile to sort of find these specific avenues where this simplification might actually obscure the broader picture. And I will definitely look into this problem of value added as much as I can. Although, yes, I mean, you probably know how tricky it can be with playing out with the input and output tables and value data. So yes, again, thank you very much. And maybe is there anything to add concerning the recommendations? Maybe just very briefly. I guess to reiterate very briefly what I kind of said previously, I kind of imagine that, you know, in the context of this dependence, expanding like equal trade ties beyond Europe for CEE could reduce dependency risks and as such strengthen global positioning. This is going to be difficult in the context of fragmentation taking hold. And I think part of this is just making sure that that Central Eastern Europe as a region kind of increases its resilience to whatever is happening in Europe and whatever is happening in other markets out there, because the diversification in this reality is probably one of the key traits that it needs. And maybe for a final point on the EU and kind of the role of the EU in this, I mean, so I would say that there is still a lot of room for improvement. I mean, the best example of this is obviously the Draghi report and the the backlash that was generated by the fact that Draghi has not consulted anyone from Central and Eastern Europe when writing it. But again, this is a two-way street for sure, and there is a lot of room for CEE decision makers and CEE policy analysts to also just become a bit more active in these discussions. And I think the point on state aid rules lobbying is a very sort of promising and interesting avenue to kind of test that potential influence. But at the same time, I think for the EU and like for the kind of mindset of Brussels decision makers, it's also just really important that they sort of factor in this combination between the different ways in which CEE countries are exposed to these global dynamics and the potential kind of geopolitical or international effects that this could bring. So I mean, in a way, obviously cohesion funding and the CAP, does a lot of heavy lifting in terms of convergence, but there is just so much more underneath that Brussels should really be aware of, and that Brussels should think of in terms of precisely risks and threats and opportunities and so on. And yeah, I mean, probably state aid is one facet of that, but again, there is many more. Thank you very much.
Thank you very much for your reactions, Jan. I would maybe first just stick with the topic of the EU and the EU's need to factor in maybe more voices from Central and Eastern Europe, and this is why we are here, to actually raise those voices and give them more platform. So maybe just firstly to Jan, but also then I would like to maybe hear some thoughts from Laszlo and Vishnya on this as well. Jan, you said that Draghi hasn't really asked people from the region when writing his report. So considering all the differences, the varieties across the clusters of countries that you have also highlighted, what it is that the region should say then to Draghi and to the European Union? What would be some of the key points that should really be heard? And Laszlo also mentioned that the Central European countries should join forces and lobby and push for a reform of EU policies. From the top of your head, what would be the key messages to put forward when rethinking EU policies in a direction to address the economic repercussions that the changing global environment is posing for the region? What would you go for?
To me or to oh, sorry. Okay. Can you just?
Yeah, first you.
Okay. To be honest, I don't really know. I mean, I'm at the relatively comfortable position of not being in charge of anything. So it's for me, it's difficult to really, and my kind of understanding of how these issues play out in real life in Brussels is probably limited. But what I can tell you from the top of my head is that I think there is just simply not enough sort of direct involvement with a lot of issues that are going on in Brussels from the part of Central and Eastern European decision makers. And I can give you one example, which is the revision of the Stability and Growth Pact discussions, which have been, absolutely key for mostly the southern countries. And, whenever you speak to to the Spaniards or the Italians, everyone would know exactly what the decision entails and what these discussions are about. And these are absolutely central discussions for the entire framework of architecture of governance of the bloc. And well, I mean, I hardly ever heard voices from CE because obviously, I mean, CE has less of a structural kind of incentive to really be particularly, although some countries do, Hungary notwithstanding. I mean, but still, I mean, CE is just not really been that responsive to some of these discussions, I think. And second of all, obviously, I mean, I guess the key point that was raised during this backlash against the fact that the Draghi report was so Western centric was precisely the comparison of growth rates across Eastern Europe and Western Europe. And well, I mean, I guess there is a strong point to make here, namely that CEE countries, you know, beyond just thinking of CEE growth in countries such as Poland or Romania in the last couple of years, not only in terms of convergence, but also in terms of just finding out some sort of models or some sort of recipes for actually navigating global dynamics relatively well in ways that might not always have occurred in Western Europe, I think should also be exposed, i.e. Eastern Europe should perhaps sell its own success a little bit more efficiently without falling into the trap of triumphalism and, you know, these kind of empty discussions on the Polish golden age or the Polish whatever that have also happened, because obviously there is much more to this and much more at stake. So I would basically say just go a little bit deeper and engage in more productive, more substantial dialogue.
Thank you very much, Jan. Krishna, Laszlo, would you have any addition to this?
So just one thing that came to my mind now is that, you know, I think that a lot of this Eastern outrage about not being consulted with the Draghi report had come actually from a more, let's say, market liberal perspective. No, so the Draghi report speaks about some of the rigidities, some of the, you know, kind of difficulties and the lack of flexibility and over-regulation in the economy as a reason for the lack of competitiveness. And then some from Eastern Europe were saying, well, this is actually what we have had. So this kind of describes better Western Europe rather than the Eastern Europe. And then part of the success of Eastern Europe is often actually attributed to this kind of liberal market policies and, you know, openness, and, you know, from even in the Polish case, the shock therapy is sometimes still celebrated. And there has been much less talk of what we discussed earlier, of industrial policies that were actually put in place in Eastern Europe, of state incentives for specific kind of industrial or developmental upgrading. So, you know, in a way, sometimes even from within the region, you would see more the sort of the benefits would be perceived more as a result of very liberal market policies, while the part that actually public policies played in it and the part that the public institutions played with it in interaction with the private ones would kind of be ignored and downside. So I would say that even if you would, so the voices that you might get from Eastern Europe would not necessarily be the ones that would actually reflect the real reasons of success behind some of the East European countries. And then I would say that, you know, something like more developmentalist, more sort of proactive, or, you know, what Mariana Mazzucato would call mission-oriented state, something at the European level might actually, working in the public interest of Europeans, might also be in the interest of East Europeans, just that they would then have to make sure that these policies or these institutions work to the benefit of all of the EU member states, rather than pitching ones or the stronger ones against the weaker ones. So I would say that, you know, kind of more often, I'd say activist developmental policies at the European level, but the one that would actually take into account differences and take into account interests of all of the different EU countries.
Thank you very much.
Just ask a question to Wisnia, I'd like to follow up on this. But do you think precisely what Laszlo mentioned earlier? So, like, you know, the next gen EU, the shore programs, and these kind of sort of macro level pushes that were instituted in place were not really you know, I mean, did they play out as these drivers for CEE, or were they mostly the opposite?
That depends. I mean, some would say that they were actually not really ambitious enough. If you would compare them with, I don't know, the USA IIR, the Inflation Act, I forgot the name now, or if you would compare it with, you know, kind of even the national industrial policies within the EU, sort of the common EU action was not actually very strong or as strong. No? So I would say that, you know, yes, they played a role, and then in a way how exactly these funds were used and were managed would also again call down on the decisions of the national governments. No, but I would say that especially when it comes to European competitiveness, then the general kind of flavor is very often we need more of the market competition, we need more of kind of getting rid of some of the structural rigidities, we need to kind of make the Europe more innovative on the kind of on the image of the US. And this is the message that you would sometimes get also from Eastern Europe, which I think is, you know, not necessarily the best way to make EU more competitive.
Thank you very much. Laszlo, before you jump in, just to also piggyback one question that came in the Q&A to you in reaction to one of your points, and EU level advocacy, if you will. We have a question from Michal Rubi, who was also one of our excellent Rethink CE fellows. He's asking whether CE countries should oppose the relaxation of state aid rules if they anyway need a strong German partner with robust industry and service sectors. So which direction should the argumentation pull? And anything else you may want to add on
I get to that, but just to the previous issue before that, EU has a split identity. The dominant identity is that market will take care of everything, and you have to leave to the market competitiveness and others. And this is also Draghi report. And from the legal perspective, this means that at least the EU is trying to create the market, the competition via principles like the principle of non-discrimination. That is means that independently of where you are, you have the same rights, you have the same obligations. Yeah. That in itself is a problem because in lesser developed countries that creates problems with competitiveness. But without going to that, that's the dominant perspective, that you have to have the same rules and you have to have this called level playing field. And this is what Draghi also preaches. Then since the 1970s, there is another line within the EU that says that you have to correct the market. The more diverse actors are in the and countries and economies are in the EU, you have to be able to take this diversity into account and in competitiveness and others, and the cohesion funds, structural funds and others are basically meant to correct that. This is a weak subdominant stream within the EU that has that basically the EU redistributes roughly 1% of its GDP. Yeah, the liberal market economy of the US redistributes 20%. So there is still space to develop. Now, what happened after the COVID crisis was that instead of going into the more market ID, and that was very important, they went to both directions. The EU tried to do both things, create more market correcting via this new generation EU, but also it basically relaxed this idea of non-discrimination, relaxed the idea of the level playing field. Basically, that's fragmented the market with the state aid regulations. And here, what's the name of the who asked the question? Marton?
Michal Shubi.
Michal. So to answer the question of Michal, there is not much benefit, just that for the Eastern Europeans, that keeping alive these firms, it's fine, but basically they will reduce their production and they will use much more from producers that are closer to them or within this country. So this doesn't really help much to the Central European economies. What really would help is to strengthen the other line of EU. That is there. There's a lots of pressure. There is Matthias Thiemann and his co-authors write a lot about this hidden developmental state. Then others write about the emergence or re-emergence of industrial policy, transnational industrial policy. This is the way to go. That's the way that basically the single market can be made to a positive sum game. Positive sum game that both the German or the core and the peripheral countries might gain from it. Yes, this needs industrial policies. This needs policies that try to increase the competitiveness of the European firms by strengthening the distribution within them of skills, of capacities, and so on. So that's what I would say. That this is very important, and for that, Vishnja is right that perhaps some of those incumbents who are now in Central Eastern Europe might not fight for that, although they have room for that. So there is this room for that, and EU, although it's a very incomplete political institution, but it has, and Orban uses that, has lots of anti-hegemonic means like veto and others, so they have powers also to push through, and not just lobby or ask or beg, but also push through policies. Unfortunately, they don't do it.
Jan, please go ahead.
Yeah, maybe I think that last point that was just mentioned really circles back to what Vishnja said earlier. I mean, the real question is the state capacity for specific countries to actually efficiently pursue these industrial policy agendas in full. And I mean, obviously, we've got increasingly more research on this. You mentioned Matthias Thiemann, but also I know Timo Seidel and Luke Schmitz are working on this. So there is a lot of research. But again, I guess beyond your special issue from RIPE from a couple of years back, at least to my knowledge, I mean, there's still a long way to go in terms of really increasing our understanding of how this plays out in CEE. Because I mean, I'm just thinking from the top of my head, and I can't really. I mean, it's really hard for me to really think, to really structure, to somehow pin down these state capacity or these state capacities vis-a-vis potential industrial policy applications in the region. And maybe, I mean, I definitely need to read more, but I think it's an important point.
Thank you, Jan. And since we are returning back now to the national level, we still have like 8 minutes allocated for us. I would like to just kind of re-emerge one of the points and recommendations that Jan made on the national level. And one of your key points there, Jan, was really rethinking social policies, social spending, and moving maybe away from compensatory spending also into more investment into human capitals. Now, of course, the source of this can be the EU, but also the national level policies are the ones that can really translate this into practice. And I just wanted to probe you a little bit more on this, how you would think it should play out across the various clusters, and where you really see the biggest opportunities in this that might also later on serve as inspiration for other country contexts. I know that you have been looking at various case studies, so also feel free to just maybe pull on that a little bit.
Yes, thank you, Zuzanna. This is my turf, so I'm happy to just talk about this for a long time. But to be honest, I'm rather
make it like 3 minutes.
Yeah, I'm rather a pessimist on this front. Namely, I believe that as for now, Central and Eastern European countries are rather locked in this negative cycle of basically maintaining and even expanding the compensatory social policies at the expense of social investment, not least for political reasons. When I was doing some final research for this paper, I came across a statistic that showed that when was it, 2023 Slovakian elections that saw Fico return to power, 45% of the voters were pensioners for Smer. So there is a lot of political pressure for compensatory social policy in the region that will only increase as demographic aging accelerates in the region. So I think this means some form of a structural lock-in. And so far, especially for those countries that somehow balance this kind of industrial focus with more services and these high human capital experts. Yeah, so Poland, Romania, to some extent Hungary. I mean, Hungary also has quite a few of these kind of business support services, back offices, investments, and so on. To me, this was mostly post-communist dividend, and I think it's probably one of the key vulnerabilities for the region in the coming decades. And here again, I see a major role played by the EU in terms of creating a structure of incentives for these countries to actually rethink the way in which they sort of manage their social spending patterns. And particularly these COVID decisions, so like the SURE programs, which were far more compensatory than investment centered, but nonetheless, I think the EU has to kind of step in and create that right structure of incentives. The problem is without social union, there isn't really that much that can be done directly, but initiatives such as the European Social Fund and so on should definitely be supported, and I can't really think of any better ways.
Thank you very much. Any quick thoughts on this from Vishna or Laszlo that you would like to chip in with?
One thing regarding the role of the EU in this, I'm afraid that I'm a little bit less optimistic actually when it comes to that part, partly because the European Social Fund, it actually kind of finances these short-term trainings, programs, etc. But you can't really use the EU funds for financing teachers' salaries, for financing these ongoing sort of expenses, which would actually be at the core of any kind of serious human capital building strategy. And if anything, maybe even most of these countries don't really have this problem, but then maybe even, the EU limitations on the public spending overall can actually go against the sort of increasing the spending on education as a way to raise human capital. How exactly to do it and what could be the ways to sort of raise awareness of this issue, I guess, or sort of to raise the kind of the domestic political will in the end, because I think somehow the differences that you, Jan, also mentioned between the Baltic countries or the Visegrad countries, they had to do also with the way in which they managed their economic restructuring overall. So in the Baltics, the big education spending appeared as part of nation building more than early vision of now we are going to be some ICT, pioneers, and then this turned out to be like a positive collateral actually. And so, how to actually put back or reevaluate the role of especially public education as a tool of economic development. This, I think, would be sort of a major actually domestic thing, but I don't really have a very good recipe how to go about it.
Let me mention that this is not my cake, but the domestic politics of it will be more important in the short run, definitely, than any kind of EU intervention. That's in the US, this type of interventions extending federal level exposure or intervention in such issues took over 150 years. And that was a federal state, not a intergovernmental bargaining based state. So it's even harder in the so it took basically the New Deal and the big crisis to have such policies. But in the domestic level, such politics that Vishnja already mentioned might be the most important. There is a new book by Ben Ross Schneider, who studies in Latin America seemingly very similar cases that yield very different policies of education policies and investments in education and in human capital in general. So depending on how domestic actors are organized or how these kind of issues are framed, one can achieve even breakthrough. That's the message of the Ben Ross Schneider book. So I would go for, my bet is on that, on domestic factors.
Thank you very much for amplifying that, Laszlo. Unfortunately, we are reaching the end of our time, but I think we have touched on quite a variety of things. We have seen the impact of global economic fragmentation on Central and Eastern Europe and the varieties of it, which Jan really richly introduces in his paper. So I really encourage all of you to take a look at it. It is available on our website. I have pasted the link in the chat, and we will also, of course, share it along with the video on YouTube. I'm very glad that we had the insights also of Laszlo and Vishnja, and that we managed to touch on both the EU level aspects that may shape how the region can address the challenges it may face, but we also highlighted that domestic politics and domestic factors will play a very important role in addressing the challenges and adapting to a new evolving situation. To conclude, I would like to pass the floor back for just a short minute to Jan, and then I will just say thank you, and we will close. Jan, any last thought?
Yes, no, thank you very much for everyone for this rich discussion. I think the main problem with really extracting the influence of whatever global economic fragmentation really is on the region is, for one, that it's difficult to really operationalize what we mean by GEF for one, and what we mean by CE for two. So basically, in this discussion and in this paper, I kind of wanted to lay the ground for any further more granular analyses of these interactions. And obviously, there is still a lot of room that needs to be explored. I don't think we really, I mean, obviously, as you mentioned, there is a lot of leeway, and there is a lot of room for action by both transnational institutions in Brussels as well as national governments. And it's probably worthwhile that we kind of keep on talking and discussing this, because for one, it's a question that deals with these specific events as they as they sort of unfold in recent years, but also just this more kind of incremental historical trajectory of Central and Eastern Europe's kind of economic, socio-economic, political transformation that is, you know, always very lively and always in motion. So we need to remember about both aspects and keep on in the discussion. Thank you very much.
And I think you really gave us a lot of food for thought to continue that discussion. So thank you very much. And thank you also to Vishnya and Laszlo for your excellent contributions and for joining us today. As I mentioned, this event took place as part of our Rethink CE Fellowship program. And I would like to also highlight that our next discussion will be held on May 14 with Galina Kotliuk, who deals with a completely different topic, which also kind of shows you the variety of policy areas that we are trying to cover, building on the initiative and ideas of young analysts from across the region. With Galina, we are going to discuss a heavy topic, the impact of gender-based violence in wartime in Ukraine, and how this problematic can be and should be addressed as part of the recovery process. So I really encourage you to tune in about 2 weeks' time. I have shared the link, but of course we are also going to put it out on our social media channels. I would like to once again thank all of you, both in the panel and in the audience, for staying with us. And I hope that we'll be able to welcome you at our future events. Thank you so much.
Thank you.